Dear respected all, my name is Kausar Abbas and I am Associate Professor of Islamic Finance. It is great pleasure and honor to speak at this international conference on financial technology and business analysis. In light of this, I am really thankful to the organizing committee of this conference for inviting and giving this chance to speak about digital financial services in Pakistan. So let me share my slides with you all. Okay, here is the topic, the growing trend in usage of digital financial services. State Bank of Pakistan stated that digital financial services include a broad range of financial services accessed and delivered through digital channels. As we know, digital finance is the delivery of traditional financial services digitally through devices such as computers, tablets, and smartphones. Nowadays, the financial system is adopting new financial technologies rapidly to facilitate their customers to financial services, such as State Bank of Pakistan has already taken initiative to launch permitting and regulatory framework for setting up digital banks in Pakistan as a separate and distinct category in the banking business. According to State Bank of Pakistan, digital bank is defined as a bank which offers all kinds of financial products and services primarily through digital platforms or electronic channels instead of physical branches. Furthermore, this framework is primarily designed for setting up of a new digital bank. However, based on a workable business case and satisfactory digital financial services experience, traditional banks or microfinance banks may request State Bank of Pakistan for conversion of their institutions into a digital bank. Here are the objectives set by State Bank of Pakistan. They want to promote financial inclusion, provide credit access to unserved and underserved population, provide affordable and cost-effective digital financial services. They want to encourage application of financial technology and innovation in banking. They want to see the new experiences by their customers and further develop digital ecosystem. So let me explain about payment systems review. State Bank of Pakistan collects and reports the data on payment system infrastructure, instruments, and transactions, which is published on a quarterly basis. This publication explains the current state of the payments landscape of Pakistan. The data and its analysis presented in this quarter's review facilitate us to assess the growing trend in the usage of digital channels by offering data on the number of different variables. The data presented in our next slide is an aggregate of the overall payment systems data in Pakistan that has been gathered from different institutions, including commercial banks and microfinance banks. So this is the table. It shows, like if you see, starting from population, currency in circulation, number of bank accounts, number of branchless banking accounts, number of banks and their branches, and so on. Here you can see number of banks or microfinance banks having ATMs, point of sale, internet banking, mobile phone banking, call center banking, cash deposit machines, and so on. Here you can see the number of like e-commerce merchants, ATMs, cash deposit machines, and so on. So this column shows the growth. The number has been increased from the previous quarter. This data has been, is a comparison between 2021, the last quarter of the previous year, and the third quarter of this year, 2022. quarterly payment system review in terms of value and in terms of volume. So we start from e-banking. In e-banking, I will explain in my further slides. E-banking covers mobile banking users, internet banking users, ATMs, point of sale, plastic cards, payments through prepaid card and paper-based, and so on. Okay, main highlights during third quarter of fiscal year 2022. One, EMI, electronic money institution, right? So the State Bank of Pakistan has granted license to China Mobile Pakistan Electronic Commerce Company this year. Number of POS, point of sale machines reached to 96,975, while the number of payment cards declined slightly to 47.2 million from 48.7 million from the last quarter. E-banking volume and value has also been increased by 2.6% and 6.55 on quarter basis. The number of internet banking users reached 7.6 million, recording quarter-on-quarter growth of 10.6%. These users conducted 38.3 million transactions amounting to 2,906.9 billion, amounting to a quarterly growth of 13.5% by volume and 19.9% by value. During the same quarter, 38.3 million point of sale transactions amounting to rupees 189.7 billion were conducted, showing quarterly growth of 21.9% by volume and 6.5% by value. A total of 9.1 million e-commerce transactions amounting to rupees 27.0 billion were conducted digitally, showing quarterly growth in value by 1.3%, though volume declined by 32.7%. Number of ATMs increased by 1.1% as compared to previous quarter. Value of ATM transactions amounted to rupees 2,437.0 billion, of which 90.5% transactions were related to cash withdrawals and 5.1% related to interbank funds transfer. The number of mobile banking users declined by 1.0%, reaching to 12.0 million. Over 101.5 million transactions valuing around 3,085.8 billion were conducted via mobile banking channels during the quarter, showing a growth of 8.1% by volume and 5.4% by value. Branch network of banks and microfinance banks has reached to 16,788 branches, which include 16,643 real-time online branches, 48 manual branches, and 97 overseas branches. Value of total RTGS, real-time gross settlement system, in transaction during the quarter amounted 155.7 trillion, of which 106.2 trillion were related to government securities. Ladies and gentlemen, although State Bank of Pakistan, even in your countries, Central Bank of your countries have set some objectives to promote digital financial services. Like in our country, State Bank of Pakistan is achieving its objectives while promoting digital financial services, giving access of credit to population, and so on. But what is the real challenge? Real challenge has been stated by even Director of Research. He stated the challenge for banks is not becoming digital. It is providing value that is perceived to be in line with the cost, or better yet, providing value that consumers are comfortable paying for. Furthermore, through this conference, I would like to unpack questions such as how these digital financial services are improving our living standards, reducing poverty, decreasing fiscal deficit, and providing equal income opportunity. While going through some existing literature, I found these all latest research conducted by Chinese researchers and mostly conducted in this country, in China, right? So, although they have selected different variables, but my question, like as I mentioned before, are these financial services improving the standards, living standards, reducing the poverty, and so on? You see, these all are latest publications, although I have mentioned a few, but overall you will see they have not addressed the variables or factors that I have mentioned earlier. So this is the right time to explore, to know, or to identify the impact of financial digital services. Because my point is that the existing literature is silent. So what is the way forward? Are digital financial services helping in improving living standards, like as I mentioned before? So this is the right time for academics to explore, to investigate. So you would be able to give some suggestions or suggestions or recommendations to policy makers or to financial service providers, so they may redesign their objectives if they are not like focusing these points as I mentioned here. A recent study conducted by this researcher in 2022, they found that in developing countries, a persistent divide exists between gender, the wealthy, and the poor, and the urban and rural areas as well, regarding access to and usage of digital financial services. So we also need to conduct more studies to see the real impact of digital financial services. Therefore, we propose a few recommendations: simplifying the complicated banking procedures and stressing the importance of financial education, enabling the smooth implication of digital financial inclusion, such as convenience, affordability, security, user-friendly, low service charges, accurate timing, internet connectivity, and so on. But we need to conduct these studies across countries rather than as I mentioned, mostly recent studies I found in China, right? So I think this is the high time to see on the other hand, on the other perspective as customers' point of view. So therefore, we would able to say that, okay, digital financial inclusion is essential to ensure everyone can access digital financial services and thus promote sustainable economic growth. Thank you very much for listening. Thanks.